Hello, welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Morris Willie. A while ago, I made a video called Should You Buy Liquidity Services? And actually, to my surprise, a viewer told me a couple days ago that the video is actually a video we did on Sensionics, so the liquidity service video never got uploaded. My bad. So I'm here to make up that mistake, and I'm telling you why you should buy liquidity services. Now, the company revolves around the circular economy. Remember reduce, reuse, and recycle? Well, liquidity services is the reuse part of the cycle. LQDT's core philosophy is based on the circular economy, which is creating solutions for surplus and scrap items. The value-added proposition is straightforward, taking items that are more or less waste and repurposing them into a profitable product. The environmental benefits are significant as the items which LQDT buys are likely to be waste, because for most companies, the reshelving cost exceeds the recoverable value. More and more investment is based on ESG. Inflows into ESG strategies rose 42% from 2018 to 2020 and is likely to continue into the future. As LQDT is an ESG-oriented company, many investors see value in the company besides the raw financials. LQDT has 4 segments: Capital Asset Group, Retail Supply Chain Group, Gov Deals, and Machino. I apologize if I butchered that last one. The RSCG, Retail Supply Chain Group, segment is benefiting from the long-term trend of switching to e-commerce. Large e-commerce companies like Amazon receive such large volumes of returns that they commonly don't try to resell to primary customers, but third parties like LQDT in bulk. E-commerce is growing fast. For 2019, total worldwide sales were $3.3 billion and accelerated by the pandemic to grow to $4.9 billion for 2021. Global e-commerce sales are expected to grow to $7.3 billion by 2025. E-commerce also sees a large percent of returns when compared to traditional retail. Traditional retail has return rates of around 9%, while e-commerce return rates are at 20%. So as e-commerce grows more and more, e-tailers will need to deal with the high volume of returns which they are unable to deal with in a cost-effective manner, which gives LQDT the perfect opportunity. Another segment of the business I love is the Gov Deal segment, which targets government organizations to sell surplus and salvageable assets. As of Q1 2022, the Gov Deals marketplace has 15,000 government clients. Marketplaces like GovDeals will certainly benefit from things like Biden's infrastructure plan. As municipal governments upgrade various equipment and offload old equipment, it will flow through the GovDeals segment of liquidity services. Let's talk about their financials. LQDT's revenue grew 19.6% year over year to $67 million in Q1 of 2022. GAAP net income did shrink by 20% to $3.6 million, largely due to an increased technology cost, tax provision, and depreciation. However, using the company's provided adjusted EBITDA values, Q1 2022 grew to $9.4 million from $8.8 million. In addition to standard EBITDA, the adjustment adds back stock compensation and acquisition costs to earnings. EBITDA is often seen as a better metric to measuring operating performance. Liquidity Services has net positive cash, meaning it has more cash and equivalents than debt. In addition to having negligible debt, LQDT has been increasing its share repurchases alongside its growth. At the end of Q1 2022, LQDT had $17 million in shares authorized to be repurchased. Now, there's something that a lot of people might not realize. LQDT has an opportunity to thrive in an economic downturn. This is largely due to the circular economy philosophy of the core business. By nature, secondhand goods are considered in economics as inferior goods. Inferior goods increase in demand when consumers have less disposable income. Inferior goods apply to both retail consumers and businesses, so LQDT would likely see a jump in buyers across all segments. LQDT also benefits when businesses consolidate. In an economic downturn, many companies will cut non-core operations and sell off or liquidate assets. If a large-scale liquidation event occurs, LQDT's CAG segment will flourish. From current prices, LQDT has a potential 85% upside with an average price target of $27. Very interesting if you ask me, but let me know what you think below about LQDT. I'm sorry that this video didn't originally get out. I thought this was out a while ago, but it actually never got uploaded, so that's why we're redoing it again. But let me know what you think about LQDT below. Please don't take this video as financial advice, and thank you for watching Morris Money.